everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. I really don't need to waste time. Let's just get along with this excerpt, of course, that we're bringing you. I did mention at the beginning of the program that Olayemi Cardoso, and who is the central bank governor, and the deputy governors of the Central Bank of Nigeria put together what they call Monetary Policy Forum. We had almost everyone in the economic space in that meeting that day, from the Minister of Finance, Minister of State for Finance, Minister of Trade and Investment, Minister of Budget and Economic Planning, the NESG, almost everyone, so at least few stakeholders were there, and we were there from morning till evening. What did the Central Bank of Nigeria say it was doing? That they wanted to listen to everyone and take into cognizance what all of us were saying and the questions. So let's just take a look and check out how it went down.
The Monetary Policy Committee Forum brought together key stakeholders from the economic and financial sectors to address critical issues such as inflation, economic growth, and policy coordination. Discussions focused on the effectiveness of current policies, the state of inflation, and the importance of aligning fiscal and monetary measures to stabilize the economy. Mohammed Abdullahi, Deputy Governor Economic Policy, Central Bank of Nigeria, in his opening remark, he gave a summary of the policies implemented by the MPC to counter inflation and the effects they have had on the economy.
The Central Bank of Nigeria adopted a tighter monetary policy stance to combat inflationary pressures, to anchor inflation expectations, and to foster confidence in our economy. Leveraging on the traditional monetary policy tools such as adjustments to MPR, the monetary policy rate, and cash reserve requirement ratios, complemented with the use of open market operations, the bank implemented a cumulative increase of 875 basis points in the MPR, bringing it to 27.50% by December 2024. In addition, the CRR for other deposit corporations was raised to 50% and that of merchant banks to 16%, while maintaining the liquidity ratios at 30%. These decisive measures were necessary to address inflationary pressures and stabilize prices, which are critical to maintaining the confidence of market participants. We have done simulations to show the counterfactual regarding if these hikes had not happened, where would we be on inflation today? And these will be shared in the course of the forum. These efforts initially have yielded positive results, as evidenced by the deceleration on the year-on-year headline inflation to 32.15% in August, from a peak of 34.19% in June of 2024. However, inflationary pressures emerged between September and December, driven by factors such as rising energy costs and heightened demand during seasonal festivities. This underscores the complexity of managing inflation in the face of dynamic domestic macroeconomic conditions and external shocks. Although the December inflation figure showed the persistence of pressure, a deeper analysis indicates a deceleration in food prices, which is a key driver of headline inflation. And indeed, in month-on-month inflation, when you look at the numbers, you will see that they have been declining. This suggests that inflation may have attained its peak. Regarding the impact of the bank's rate hikes, we are mindful of the unintended consequences, as businesses are likely to pass on the expenses to their customers through higher prices. However, the evidence reveals that previous rate hikes have successfully moderated demand-side inflationary pressures. For example, the counterfactual evidence suggests that inflation would have been 40.65% in October 2024 instead of 33.88% if the MPR and CRR were left unchanged at 18.75% and 32% respectively. As we look to the future, let us remain steadfast in our commitment to sound policy decisions innovative solutions, and transparent engagement. As policymakers and analysts, our job is to monitor the signals, adjust strategies, and guide our economies through complex dynamics of disinflation. While it may present challenges, it is also an opportunity to reassess economic structures, improve efficiency, and chart a path towards sustainable growth.
Olayemi Cardoso, Governor Central Bank of Nigeria, mentioned the current statistics on inflation and the aspects of it that affect the economy.
Recent data from the National Bureau of Statistics indicate that inflationary pressures persist. As of December 2024, headline inflation stood at 34.80%, driven primarily by core inflation, while food inflation showed signs of moderation. Domestic structural challenges, exchange rate pass-through effects, and energy price adjustments continue to exert pressure on prices and economic activity. At the same time, we recognize that while structural factors play a significant role in Nigeria's inflationary challenge, monetary dynamics have also contributed to price pressures. The liquidity injections associated with unorthodox monetary policies, particularly since the COVID-19 pandemic, have created a significant overhang. While these measures were intended to cushion immediate shocks, they did not translate into commensurate productivity growth, fueling inflationary pressures and heightened foreign exchange volatility. Again, by way of illustration, in the course of the past 8 or so years, while GDP on average grew by 1.8% per annum, money supply grew by 13%. Excess naira liquidity in the system has amplified demand-driven inflation, further exacerbated by supply-side constraints stemming from structural deficits. These dynamics underscore the importance of a disciplined and coordinated approach to monetary policy to restore stability.
Atiku Bagdu, Minister of Budget and Economic Planning, spoke on the improvements of the Nigerian GDP growth.
The measures that have been taken, the bold and courageous measures that have been led by President Asiwaju Bola Ahmed Tinubu have yielded fruits. So our economy has turned in the right direction. We have had 3 quarters of positive GDP growth, over 3%. And 3% to many people may sound small, but yet if you compare it to all the industrialized countries in Europe, who, despite their resources, despite their wealth, have been struggling to achieve 1%. We are not beating our chest with 3%. We want Mr. President wants us to deliver higher, and we are on our way to achieving that, but it's significant. And especially when these 3% have been achieved on the back of deficit reduction and on the back of a very strong CBN team led by Yemi Cardoso asserting their independence. Sometimes to against what we feel in the fiscal side, but we respect each other. We force ourselves to rethink strategy, ideas, and become more creative. That's why so many initiatives are being unfolded in the budget. A consumer credit system to de-risk consumer lending so that more economic activity, a mortgage support system to de-risk mortgage so that more housing activity, more construction activity, National Agricultural Development Fund to further de-risk agricultural lending so that we'll see more activity in that sector, an energy transition to move to lower, cheaper source of energy for the economy, and as well as the combined effect of the removal of subsidy, forex subsidy, which we being a federation have yielded fruit massively in the sense that our subnationals are better funded, our local governments are better funded, our states are better funded, and even the federal government is better funded. And we are also increasingly appreciating that because our economy, the combined effect have made our economy competitive, we need to invest more in the economy so that we can generate higher level of growth even while targeting lower inflation.
Dr. Jumoke Oduwole, Minister Industry, Trade and Investment, spoke on Nigeria's place in the AFCDA and the importance of financial services.
We're particularly focused in the Federal Ministry of Industry, Trade and Investment on exports right now, non-oil exports. And just to say in this discussion that when we look at Nigeria's GDP, the Honourable Minister of Budget and Planning has talked a bit about agriculture and our priority sectors, manufacturing. But one of our priority areas is services. And when I look at the demographic in the room, I can't but talk about financial services, fintech, and how Nigeria is now the digital trade champion under the AFCFTA. So just to say that Mr. President announced that in December, we've been working hard at it. We hosted the Secretary General of the AFCFTA Secretariat, and also we spoke extensively about this at Davos. AFCFTA is a game changer in terms of non-oil exports for Nigeria, and Nigerian youth are competitive in services. This is where our fintechs and our financial services thrive, and even beyond financial services, all manner of services, our creative sector. So as I give this goodwill message, as we continue this discussion, let's prioritize how to make sure Nigeria becomes an outsource of business services destination. Let's continue to create the public digital infrastructure like the National Single Window project that we engaged the stakeholders on earlier this week. These are the things that will be catalytic. While we work on our monetary and fiscals and while we work on our infrastructure, we already have a competitive advantage in services, and Nigerian youth are leading the way. So I just leave you with that nugget as we start the discussion.
Wale Edun, Minister of Finance and Coordinating Minister of the Economy, gave his support in the fight against inflation alongside the CBN. He also stressed the importance of availability of food.
In terms of the coordination, the whole fiscal side of President Bola Ahmed Tinubu's administration has turned out either because they are part of CBN, the PAMSEC Finance, who is on the board, or because they know it's a wise thing to do to be here as invited, both the Honourable Minister of State and myself. But seriously, and just to end, I would say that when you talk about coordination, look at what's happening on interest rates. It's not always about sitting and meeting and saying we're coordinating. It's being able to finish each other's sentences, so to speak. So when central bank signals that in the fight against inflation, which is critical, which cannot take second place to anything, because with the spiraling inflation, not only can you not achieve anything by way of investment, everybody starts getting fearful when they see inflation spiraling. So we support and we recognize and we agree with the critical fight against inflation that CBN is undertaking and leading, although we all have our own role to play. So when CBN signals higher interest rates, we accept that challenge of being able to fund in the market without resorting to ways and means, which we're not allowed to anyway, by accepting those higher rates. Likewise, in terms of the commitment to making sure, as we saw, that in order to assist that fight against inflation from the structural side, from the supply side, from the fiscal side, we ensure that we do all we can to increase supply, particularly of, as we heard, agricultural output, supply of food, availability of food, affordability of food is a critical element in the current fight against inflation.
Rising inflation and its impact on our people and businesses. Nigeria, like many economies across the globe, has been grappling with high inflation. Over the past few years, inflationary pressures have weighed heavily on households, eroding purchasing power, increasing the cost of doing business, and threatening macroeconomic stability. While inflation has multiple drivers, the most concerning is food inflation, which continues to push millions into economic hardship. In fact, food contributed to around 60% of the changes in overall price levels over the past year, underscoring the critical role in our inflation dynamics. Globally, we are seeing inflation beginning to moderate thanks to improved supply chains and monetary policy interventions. However, in Nigeria, we must remain steadfast as inflation levels remain significantly above the desired threshold. After reaching 34.2% year-on-year in June 2024, we noticed that inflation started to decline, but is now rising again, standing at 34.8% in December 2024. So we have a lot to do to tame the beast. I must commend the President Bola Ahmed Tinubu and the Governor of Central Bank of Nigeria for the bold measures taken to stabilize our economy. The tightening of monetary policy, exchange rate adjustments, and improved transparency in the forex markets are commendable steps in restoring confidence and curbing inflationary pressures. These efforts reflect the government's resolve to create a stable macroeconomic environment for businesses and households alike. However, we must recognize that monetary policy alone cannot resolve the underlying drivers of inflation. Has to be done to improve productivity, particularly in agriculture and manufacturing. To effectively tackle inflation, we must prioritize food security. Governments across Nigeria are taking decisive steps to address security concerns that have kept many farmers away from their fields. We have intensified collaborations with security agencies and other stakeholders to restore peace in affected areas, ensuring that farmers can safely return to their lands. Additionally, we're expanding agricultural initiatives to increase domestic food production. Many states have launched mechanization programs, provided improved seedlings, and facilitated access to credit for smallholder farmers. These interventions are already yielding positive results, as we witness a gradual return of farmers to their farmlands and an increase in food output. This is a fundamental step in reducing food inflation and making staple foods more affordable for the average Nigerian. In Kwara State alone, we have empowered more than 10,000 local farmers across the state, 16 local government areas. The farmers received improved seeds, chemicals, and fertilizers as part of their third batch of support distributed by the state government in 2024. Furthermore, we have targeted 600,000 households, including smallholding farmers, in our recent distribution of farm implementations and other support. In addition, we have unveiled a statewide irrigation program to combat climate change and boost food production, ensuring year-round farming activities and improving food security across the state. Looking ahead in 2025, we are committed to scaling up these interventions. Our goal is to ensure that every household in Kwara State has access to affordable and nutritious food while making state a leading hub for agricultural production in Nigeria. Beyond agriculture, we recognize the urgent need to improve the business climate to enhance productivity and economic growth. The recent push for tax reforms is a step in the right direction. As governors, we recently engaged in consultation with the Fiscal Policy and Tax Reform Committee to ensure that our fiscal policies support rather than hinder business growth. We must strike a balance, raising necessary revenues while ensuring that businesses are not overburdened. An efficient tax system coupled with a robust investment climate will encourage the entrepreneurship, drive industrialization, and ultimately help in taming inflation. Ladies and gentlemen, reducing inflation is not the responsibility of one institution alone. It requires the whole of government and whole of society approach. We must strengthen our policy coordination, deepen partnership between federal and state governments, and work closely with the private sector to create sustainable solutions. At the Nigerian Governors Forum, we remain committed to fostering economic resilience across states. We will continue to support policies that drive food security, enhance ease of doing business, and ensure that every Nigerian, regardless of socioeconomic status, can afford basic necessities.
Dr. Philip Ikiazo, Deputy Governor of Financial System Stability, Central Bank of Nigeria, gave a rundown of the inflation and policy rates in other African countries.
Investment inflows. That is known. So if you look at, if you take Egypt, December 2022, inflation rate was 21%, policy rate was 16.25. In March 2023, inflation in Egypt had gone up to 32.7. Policy rate was still at 18.25. By June 2023, it had gone to 35.7, and policy rate was 18.25. September 2023, inflation had gone up to 38%, and they inched up their policy rate to 19.25. And by March 2024, inflation had now started coming down from 33.7 to 33.3, and they had gone from 19.25 policy rate to 27.25 because they needed to wipe away that negative real interest rate to enable them. Sorry, Honorable Minister is here. You're supposed to be right up here with us.
Thank you.
So inflation had come down to 33.3, and they still took policy rate up because they know that you had to stay the course, and they stayed the course up until June 2024, when inflation continued the downward trend to 27.5, and policy rate they maintained, they held their nerve at that 27.25, and they held their nerve up until September 2024, when inflation for the first time came below the policy rate. And they held that same policy rate up until December 2024, and inflation had gone down 24.1%. So clearly, same trend followed in Kenya, same trend followed in Ghana. Ghana took policy rate up to 30% to be able to bring their inflation high of 38% down, and they held that policy rate even when inflation came down to 25.8%. They held that policy rate at 29%. It was only towards the end of the year, the last 2 quarters of 2024, that policy rate came down to 27%, and inflation was now curtailed. So, expecting that we're going to do any magic, the trend is the same all over the world. So expecting that you're going to have any magic by keeping rates low, you're never going to achieve curtailing inflation. And statistics make it clear that once inflation is high, forget real output growth. You're never going to achieve it. So, and that's exactly what the Minister of Finance mentioned, that once we bear that in mind, how do we now handle the trade-offs to ensure that the common man on the street is not suffering, to ensure that we apply the right policies on both sides?
Aminu Gwadabi, president of Bureau de Change, expressed his appreciation for the inclusiveness of the MPC forum and reinstated his support moving forward.
The forum have given opportunity for different stakeholders, regulators and fiscal authorities, agencies to interact. In fact, if I may quote the governor rightly, in his opening remark, he did say this is a diversity in consultation. All along, we have never seen this kind of engagement. Today marks a thoughtful leadership. It marks resilience and also a transformative leadership. It's a way of communicating their policy to stakeholders, like he did say, and he urged all of us to be advocates of the central bank policies about breaking what the communications gaps are. They were able to close a lot of gaps. They have opened up for partnership and collaboration. So I pray they continue doing this to engage stakeholders, because we are their engine room. We remain, like you said, a critical retail sector, the potent and effective for that matter. We have proven that over time in terms of closing gap. All we are hearing today is about inflation, naira depreciation, and there are trade-offs. How do we work around them and avoid going into deflation? Because that is the big picture we're all looking at.
Ken Okoha, President, National Association of Nigerian Traders, commended recent moves by the CBN and gave key insights into inflation.
What I used to call a private Bank of Nigeria, if you understand that. We now have a Central Bank of Nigeria, a bank that is really looking at the people and also getting inspired by the comments and the expectations of the people of Nigeria. That's what we have. Number two is that this is a beautiful communication strategy that has been left out for a long time. But beyond this, it's also important to recognize the importance of expanding the tentacles of this particular forum. Now, if I were to say, it's important to relate this to the entire economy, where we will not be talking about the monetary policy alone, but the Ministry of Finance learning from this and then taking an overhaul, sphere of the economy, looking at the sectors one by one, bringing the agriculture sector, bringing the manufacturing sector, bringing the trade sector, bringing services sector, and then the entire wheel of the economy, discussing all of this to know how all of this link to the movement of the economy. So that we are not looking at inflation alone, because whichever way you look at it, inflation is caused by multiple factors. And then the multi-sectors that are involved in these factors must also come together to look at how a surgical operation could be done to impact on the people. Now, the other point that we need to look at is strategically, what is the role of the Central Bank of Nigeria in managing inflation? Are they the only organization or institution responsible for this? My answer is no. They have taken their own part. Can others therefore learn from this and pick up their own? For instance, I mentioned agriculture sector. And of course, we are looking at food insecurity, which is the bane today, and which, of course, many international organizations have also predicted that this 2025 is going to be worsening. Now, what is the approach of the Ministry of Agriculture, for instance? I want to say this. What's their approach? Can they also have this kind of forum where, various sectors and, affiliates in the, around the ministry can also come together and see how to dialogue and get this off? So, in all, anyway, I think that this is a way that a government that wants to succeed would approach the cost.
Doris Aniti, Minister of State, Industry, Trade and Investment, mentioned the reasons for the constant rise in inflation and likely solutions.
I think the top 5 causes of inflation is food inflation, energy cost, transport cost, access to credit, that's financing cost, interest rate cost, and then the money supply issue.
Sure.
Thank you. It's a top 5. Now, if you now disaggregate and we take each one of them and tackle them one by one, you will see where they all fit in.
Correct.
If you take energy cost, it also affects transportation cost. But transportation and logistics in itself has its own component. Availability of the rail infrastructure, which we don't have, can bring down significant cost of transportation. We don't have enough trucks on the road. And we also don't have enough roads that are fully well maintained. I mean, the other time we went through Oshogo, and we saw more than 5,000 trucks, trailers, stock. A lot of them carry perishable goods, and they were getting spoiled. And so if you stay for 1 month on that road, first of all, we've sequestered available trailers, and then the goods that they're carrying have already gone bad. So whatever is left, the sellers are going to hike price. And we find those sort of locations across the country. But luckily, the president got wind of it and has asked the Minister of Works to do something quickly about that road. That's one of, is an example. So if you break down all of the components and tackle them one by one, energy cost, okay, is a lot. Energy cost, for example, luckily, I mean, we have 2 major initiatives currently that we think can significantly reduce energy costs. But then it still needs active support from the monetary side and the fiscal side. An example, we were importing all our PMS and all our petroleum products. Now the Dangote refinery has come on board, and the other refineries, even the NNPC refineries, are also coming on board. That's going to reduce significantly our energy costs and our dependence on importation for that particular energy. And therefore, our dependence, or rather, the linkage between our currency and foreign currency, which is pressure reduces. If we can delink our foreign exchange, our naira, to the dollar by producing domestically, we've gone a long way. Like the president of Manufacturing Association said, if you domesticate your supply chain, i.e., like I just mentioned, the Dangote refinery will go a long way to making sure that energy cost is money, not just energy cost. There are other inputs, petrochemicals, that could be produced that serve as primary inputs to other industries that then take them up as raw materials, and they're cutting their sourcing their raw materials at a cheaper cost. Then they can go into production and then create jobs, hire more people, and the economy begins to boom.
Dr. Kefi Bala, Acting Director, Monetary Policy Department, Central Bank of Nigeria, spoke on the role the CBN plays to Nigerians, and she also mentioned the importance of the fiscal and monetary policy coordination.
A lot of people misunderstand what monetary policy actually is all about, why we take the decisions that we take, and they think we are unaware of the impact that our policies would have on either the economy or on the welfare of citizens. Meanwhile, the very reason why the central bank exists is to manage price stability, to ensure price stability, towards promoting growth, thereby reducing poverty. So whatever we do, they are misunderstood because we are technocrats. So we decided that there was a need for us to bring all our stakeholders together so that we will talk to them, they will listen to us. So let me put it this way, if you noticed, no central bank staff or MPC member made a presentation. They only anchored sessions. All the presentations came from external donor partners, technical partners like the IMF, the World Bank, the AFDB, and then also the panelists. All of them were either from the private sector or the fiscal sector. So the fiscal and monetary policy coordination is very essential. It is key to us achieving our objective of price stability. And when we say fiscal sector, usually people just think it's the Ministry of Finance alone, but it is not. We need the trade and investment arm. We need the agri sector. We need national planning, all sectors of the economy. And we were able to gather a large number of them here today. NACIMA was there, National Association of Nigerian Traders. We also had the Bureau de Change. We had people from all sectors. We have the academia. So we listened to them, and we were able to give some explanations. But the essence of us having this is we now have some feedback, which we're going to take back. When we're doing our policies, after looking at the econometric aspect, which we will do with our modeling, we will add intuition to see what we can do to get results that will spread across all sectors. We can't win it all, but with baby steps, we will get to where we want to get to.
Olayemi Cardoso, Governor Central Bank of Nigeria, in his closing remarks, emphasized the need for communication and the importance of forums like the MPC Forum.
The last thing that I will perhaps talk about, which is again related to what I've just said, is the issue of communication. And we are strengthening our communication mechanisms within the central bank. We know how very important it is, and that is why forums like this too are so important. Because much as we may want to put things out onto the press, after MPC, etc., but you who are all here should be our greatest advocates. You should be. You shouldn't tire, you shouldn't go out, you shouldn't keep quiet. Where there's need for you to talk, educate people, that's even more effective, in my view, than what the central bank governor has said, which may be received at times with some degree of skepticism. So we will continue this kind of engagement with the objectives of communicating. It's not, this is good to enlighten and educate, but we expect that after that, you become advocates and you'll be able to spread the story out to members of the public. So with that, I really want to thank everybody. I know somebody is coming to thank you after me, and you certainly will be doing that very robustly. But I just want to use the opportunity while I have it, and I know that DGEP is telling me I have maybe 30 seconds left, and the only thing I will do with that 30 seconds left is to say thank you.
The MPC Forum marked a crucial step towards fostering a collaborative approach to Nigeria's economic development by facilitating open dialogue among policymakers, industry leaders, and stakeholders. The forum paved the way for innovative solutions to address the nation's economic complexities, ultimately shaping a brighter economic future for Nigeria. Khadija Dirisu, Moneyline with Nancy.
And that's it on today's edition of the program. Thank you all for watching. I am Nancy Naji. Please join us again tomorrow. Be the best you can be and be the change that you want to see. Bye for now. Thank you for making it up to this minute watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Like, follow all our other social media platforms where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.